Welcome back, everyone. This series is Bitcoin. Road to $200,000 isn't about hype or price predictions. It's about staying grounded on the climb week after week, no matter how steep it gets. Whether you've just started stacking or you've weathered every storm since the early days, you're part of this journey now. And lately, the path has started to feel heavier. Bitcoin is trading near critical levels again. Some say the bear market is already here. Others believe we're just in the middle of the climb. In this episode, we'll talk about what would truly signal the start of a bear market, what needs to happen for Bitcoin to reach new all-time highs in this cycle, and how I'm personally approaching this phase, including the price zones where I see solid buying opportunities. Of course, that's just my opinion, not financial advice. So take a breath, zoom out, and let's get some clarity. If you'd rather understand the market than fear it, subscribe and join the climb. Let's get into this week's update. So, is the bear market already here? Last week, we talked about how Bitcoin was holding above the 200-day moving average, that invisible line many traders use to separate bull from bear territory. This week, that picture has shifted. At the time of recording, Bitcoin trades around $104,000, sitting just below the 200-day SMA. Technically, by traditional market standards, that's already considered a bear market. But in Bitcoin, things are rarely that simple. If you've been through a few cycles, you know these dips under the 200-day line happen more often than newcomers think. In every major run-up, Bitcoin has briefly fallen below it, shaking out weak hands, before reclaiming strength and moving higher again. And right now, the support zone around $99,000 has held firm several times. So far, that's not the behavior of a market in freefall, and it's a market searching for direction. Zooming out to the long-term power law chart, Bitcoin still moves well within its historical growth channel. Nothing about the current structure looks extraordinary or signals the end of the cycle. In fact, a new all-time high within this cycle would still fit perfectly inside Bitcoin's long-term trajectory. So instead of rushing to label this a bear market, it might be wiser to view it as another stress test of conviction. For me, this isn't a time for panic, it's a time for patience and preparation. And yes, there are certain price zones where I see real buying opportunities, but more on that later. Not financial advice, just my perspective from years on the climb. So, what could push Bitcoin to a new all-time high? When people talk about new all-time highs, they often imagine some mysterious trigger, as if one sudden event will send Bitcoin straight to the moon again. But that's not how it usually works. In reality, price moves are born out of pressure. Slow, steady, fundamental pressure that builds until the market has no choice but to reprice higher. And right now, there are three forces quietly creating that pressure. First, institutional demand, the new foundation. For the first time in Bitcoin's history, we have consistent institutional buying week after week. Spot ETFs, corporate treasuries, pension funds, family offices, they're all allocating small but steady portions of their portfolios to Bitcoin. Billions of dollars have already flowed in, and that's just the beginning. So why isn't the price much higher? Because 2025 has also been the year when many old whales and early OGs decided to take profits. After holding for years, or even a decade, they've distributed part of their stack to the next generation. That's normal. It's not weakness, it's market maturity. Their sales have simply absorbed the new institutional demand. Instead of a parabolic spike, we've seen a slow, healthy transfer of supply, from those who've already made it to those who are just arriving. But here's the key. The institutional phase has only just begun. Most large funds still hold less than 1% exposure to Bitcoin. If that creeps up to 2, 3, or even 5% over the next years, the inflows we've seen so far will look tiny in comparison. That's where the long-term upside lies. Not in hype, but in allocation math. Second, macro wins, the next catalyst. Then there's the macro side. Interest rates are high, liquidity is tight, and for now, that's been a headwind. But markets move in cycles, and liquidity always returns. If central banks begin easing, if real yields drop, if the dollar weakens, capital will search for scarce assets again. Bitcoin doesn't need the world to collapse to rise. It just needs money to start moving. And historically, when liquidity comes back into the system, Bitcoin is often the first asset to respond, long before stocks or real estate even notice. Add global debt at record levels, mounting fiscal pressure, and the quiet erosion of trust in fiat systems, and you can see why macro still sets the stage for Bitcoin's next leg up. Third, the missing retail phase. The third force is the one most people overlook. The retail wave hasn't even started yet. Search trends, app sign-ups, social chatter, all far below 2021 levels. This bull market has been driven almost entirely by institutions and long-term holders. Retail, the public, hasn't truly shown up yet, and that means the psychological FOMO phase is still ahead of us. When headlines scream new all-time highs, when your friend who once sold at 30,000 suddenly asks how to buy back in, that's when we'll see the second stage of this bull market ignite. And historically, that phase comes fast, loud, and emotional. So to answer the question, yes, a new all-time high in this cycle is absolutely possible. Not because of speculation, but because structural demand keeps growing. Macro conditions are slowly shifting, and the public hasn't even joined the party yet. We're not witnessing exhaustion. We're witnessing foundation building. But let's stay humble for a second. None of us have a crystal ball. Markets don't owe us a straight lineup, and history shows that Bitcoin can surprise in both directions. It's entirely possible that we're already standing at the early edge of a new bear market. Yet that's the beauty of Bitcoin. Moments like these, full of uncertainty, doubt, and hesitation, often turn out to be the best opportunities for those who know what they're looking for. And that brings us to the next part of today's episode, how I'm personally approaching this phase, and which price zones I see as potential buying opportunities. When you've been in Bitcoin long enough, you learn one thing very quickly: there's never absolute certainty, only probability and preparation. So here's how I'm thinking about this phase. Not as a trader, not as a short-term speculator, but as someone who's lived through both euphoria and despair more than once. At the moment, I see three zones that define my personal approach. First, the patience zone, above 100,000. As long as Bitcoin trades around 100,000 US dollars, I'm not rushing into anything. The market is still deciding whether this is just a correction or the start of something deeper. If momentum flips back above the 200-day SMA with volume, that's confirmation enough for me that strength is returning. Until then, I'm watching, not reacting. Second, the opportunity zone, around 90,000 to 100,000. This area is where things get interesting. It's where fear starts to creep in, where headlines turn negative, and where disciplined accumulation begins to make sense for me. It's also where the risk-reward ratio starts to tilt back in favor of long-term buyers. No leverage, no predictions, just steady positioning with dry powder ready. Third, the gift zone, sub 90,000. If we break below 90,000 and find support closer to the high 80s or even mid 80s, that's where I personally see the potential for strong long-term entries. It wouldn't be the first time Bitcoin revisits previous support before climbing again. And if it happens, I'll view it not as a breakdown, but as a blessing in disguise. Beyond all these zones, I keep one habit unchanged: regular DCA. No matter the headlines, I continue stacking small amounts on schedule. It removes emotion from the process and keeps my focus on time in the market, not timing the market, because conviction isn't built in bull runs, it's built in consistency. Of course, none of this is financial advice. It's simply how I think about risk, conviction, and timing. Every investor needs to define their own comfort zone and time horizon. For me, it's about staying calm enough to act when others freeze and patient enough to wait when others chase. Because in the end, the goal isn't to buy the exact bottom. It's to still be standing when the next wave begins. But that's just how I approach it. I know every stacker out there has their own plan, their own rhythm, their own way of staying in the game. So I'm genuinely curious, how are you positioning yourself in this phase? Are you stacking through the dips, waiting for confirmation, or building up dry powder for lower levels? Drop your thoughts in the comments below. I read as many as I can, and these conversations are what keep this climb alive. Because every perspective adds something to the bigger picture. Every week we take one more step on this road, through noise, uncertainty, and everything the market throws at us. Some weeks feel easy, others test your patience, your conviction, and sometimes even your sanity, but that's the climb. No one said reaching new heights would be comfortable. It never is. But that's also what makes it worth it. If you've made it this far, you already think differently from most people out there. You're not chasing the next headline. You're building the mindset that survives every cycle. So stay calm, stay sharp, and keep stacking with intention. If you found this episode useful, give it a like and subscribe if you'd rather grow stronger through the storm than get lost in it. I'll see you next week on the road to 200K.